Let's begin in Egypt, where political turmoil is taking its toll on the country's already fragile economy. Foreign companies have shut factories and closed offices, while a curfew has affected markets and small businesses. Esther Hakim takes a look at the economic impact of the latest developments on the ground.
The first to be affected by the crackdown on protesters was the stock exchange.
The market saw major profits after the ouster of Mohamed Morsi. But the violence this week led to a 1.2% drop and losses exceeded $500 million in only 1 week. We're losing what we had gained a month ago, and it was a good decision to close the market from Thursday to Sunday.
On a positive note, the weak Egyptian pound managed to hold up against the dollar. But for consumers, food and fuel shortages are beginning to bite.
Most supermarkets and shops are closed, so there's not enough supply of food and basic goods to the people. But we already stocked our necessities as a precaution.
People are afraid to shop like before, and our sales dropped. If it remains like this, we can close down.
Hardest hit has been the country's tourism sector, which is a major source of hard currency. Already struggling after the 2011 revolution, it has witnessed further cancellations from various countries, although its largest market, Russia, has not issued a travel ban on Egypt. The interim government announced this week that it is preparing an economic roadmap for Egypt. But observers say no roadmap would succeed without retaining security and stability in the country. Yasser Hakim for CCTV, Cairo.
All right, let's now get a wider perspective on the events happening there in Egypt. Yasser Hakim is live for us in Cairo. Yasser, thank you for joining us. So are we likely to hear anything from the interim government over funding from Arab foreign donors?
Yes, the Arab foreign donors have been supporting Egypt throughout the last month after the ouster of former President Mohamed Morsi. And we know about the $12 billion of aid from 3 Gulf Arab states. Now today, Saudi Arabia gave more support. The King of Saudi Arabia had issued a statement where he said that he is backing Egypt in its quest. He is backing the interim government, and he is backing Egypt politically and economically if it needs so, which was a strong message to the Egyptian leadership that they will get the economic support they need when they need it from Saudi Arabia at least. And Saudi Arabia, you know, could be followed by other Gulf states that retain the same policies of this kingdom towards Egypt.
Oh, yes, sir. So just hang on a minute. Let's cross over live to London. Melanie Ralph is live for us from there. Melanie, good to have you with us. So President Obama, very quiet on the issue of U.S. financial aid to Egypt. So how is this likely to affect foreign money coming from the Western world to Egypt?
Well, this is a good question. We know that the US are reluctant to cut off aid to Egypt with fear of losing leverage in the broader region. They've cancelled military exercises, but some analysts are questioning if this is enough to show Egypt they don't accept the continuing bloodshed and that cutting aid should be considered. Military aid is in over $1 billion and economic aid is about $250 million a year. Cutting off US aid to Egypt could be tricky because of complex financing arrangements. Breaking the contracts would impact US defence contractors. Not only that, Egypt is of course strategically placed, having one of the most busiest shipping canals, which at the moment the US Navy gets expedited through.
All right, Melanie, we'll be coming back to that issue of commodities. Back to you, Yasser, there in Cairo. Does the Egyptian government have a plan to deal with implications of a possible freeze of aid by the US and EU?
Well, Melanie just mentioned the word leverage, and this is what the Egyptian leadership may use if the freeze by aid from the EU and US takes effect. Now, there's a lot of talk within the public, within political forces and political parties and leaders. They're saying, why depend on the US and the European Union if they will not be supportive? We've got the Gulf states, we've got Saudi Arabia, United Arab Emirates, and also Kuwait. But now Russia has also voiced its support to Egypt, and in a statement by Vladimir Putin, he said that he's willing to support Egypt politically and economically, and this could also mean China as well. So there's now a trend within the political forces trying to push the government to open the route of the other side with Russia and China, plus the Gulf Arab states, and they're saying this would be enough to help Egypt at least through this tough times economically and politically.
And Melanie, let me come back to you. Talking, of course, about commodities, Egypt home to one of the busiest shipping lanes, that's the Suez Canal. What can we expect? Perhaps more pressure on oil prices due to a possible supply disruption?
Well, the price of oil is certainly under pressure. We're already seeing a supply squeeze that's keeping the price of oil on an upward momentum. Now, speculators who worry that the turmoil in Egypt will affect oil supplies from the Middle East and North Africa will push oil prices even higher. Although we're not hearing about any disruption to the Suez Canal at the moment, traders are worried about what would happen if it did close. And some analysts say that if the canal shuts, then it could prolong shipping by nearly 2 weeks in some cases. So those who don't want to be caught on the wrong side of the trade if the Suez Canal disruption does erupt are adding to that speculative burden on the price of oil.
All right, Melanie, Ralph, looking particularly bright in blue there. Thank you for joining us live in London. Yasser Hakim live for us in Cairo. Thank you for joining us here on BizAfrica. Now, still in North Africa, the Tunisian economy is facing a slow road to recovery. 1.5 years after the toppling of Ben Ali, the country's economy is yet to be revived. However, the tourism sector, which is the country's second foreign exchange earner, is making headways. CCTV's Roy Rattenberg tells us what the government is doing to bring it back to its original form.
This souvenir market northeast of the Tunisian capital Tunis might not look that full, but there are more people here now than one might have expected. The toppling 2.5 years ago of Tunisia's former ruler, Zine El Abidine Ben Ali, practically toppled this industry with it. Hotels emptied overnight, and over time tourism dropped by 15%. Tunisian officials say the numbers are now coming back, but the vendors here simply don't believe them.
Because of the conditions, the attacks in Mount Shambi, and what people are seeing on TV, it's normal that people would be afraid. Arabs and Tunisians are afraid, let alone the tourists.
Tourism in this North African coastal nation is the second biggest moneymaker, behind agriculture. Indirectly, it equals roughly 2 million jobs, about 1/5 of the population. Proximity, Italy is just a few hundred kilometers across the sea, and language, French is widely spoken, have helped make Europeans feel at home here for years.
My family was more scared than I was, and I asked my friend, we called our friend, and he said there was no problem at all, so we came in Tunisia anyway.
The government wants others to do the same and has promised to help. This week, officials unveiled a new plan that will extend marketing campaigns and specifically target Asian travelers. The government hopes the calm waters and the post-revolutionary calm in the streets might attract them.
But the tourists and that calm aren't guaranteed. Attacks by suspected Islamic militants have become more brazen in recent months, which vendors say explains why most tourists who do come now prefer to stay by their hotel pools. And while the figures may be disputed, one thing can't. The vendors used to close their shops well after sunset. Now they close well before. Rowie Rettenberg, CCTV, in Sidi Bou Said, Tunisia.
To Libya now, where the Prime Minister Ali Zaidan says the country will use all means necessary, including military force, to prevent striking security guards at the country's main ports from selling its crude oil independently. In a critical challenge to the government, strikes at Libya's 2 largest ports have pushed production and exports to their lowest levels since the civil war that ousted veteran leader Muammar Gaddafi in 2011. The protests are located mainly in the eastern portion of Libya, Libya at the major sites Es Sider and Ras Lanuf. The two ports have a combined export capacity of just under 600,000 barrels per day out of Libya's total of just over 1.2 million. The outages have been a major factor in pushing up world oil prices, with benchmark Brent futures hitting a 4-month high of around $111 a barrel. You're watching BizAfrica. Let's take a break straight ahead. We look at the state of discussions for the entry of global retailer Walmart into the East African market through Massmart. And what is being seen as a testament to the growth potential on the African continent, the world's largest retailer Walmart is set to acquire a 2/3 majority stake in Kenyan supermarket chain Naivas. The arm's-length deal that is still under negotiation will see South African retailer Massmart, majority owned by Walmart, pay up to $70 million for a 67% stake in Naivas. CCTV's Peter Okaba sat down with the Naivas management to gain further insight on the deal and filed this story.
Brisk business at one of Africa's fastest growing supermarket chains. Investors, it seems, have taken notice. Naivas, a Kenyan supermarket chain, announced earlier this week that it was in talks to sell a majority stake in the company to one of South Africa's largest retailers.
We have been talking to Massmart since last year, but 2011, September, thereabouts. So that is when they first came and approached us.
The talks, which had earlier fallen through, were for Massmart to acquire a 51% stake. The stake at the time was valued at approximately $35 million.
The middle of last year, yes, the talks broke down because we could not be able to agree on the valuation.
Fast forward to 2013, and talks this time round are for a 67% stake, with Naivas now valuing its business at over $70 million. 3 new branches and a rebranding exercise have seen profits surge to just over $3.5 million in the year 2012. The company is projecting strong growth, with profits expected to reach $5.8 million by the year 2016. For Naivas, the entry of a strategic investor with deep pockets will enable the chain realize its aggressive expansion plans.
I'm sure if the transaction was to go through, we could be able to expand freely, and the market is too big here.
The new owners intend to retain the company's branding, with the current management staying in place for the first 3 years.
What does this deal mean for Naivas as a company and for you as a management?
For Naivas, for Kenya, it's a big win if they come, because I think it is a kind of confidence that they are seeing in Kenya and in Naivas for that matter.
The negotiations continue under a non-disclosure agreement, which means that further details of the deal will only emerge once the deal has gone through. Africa remains one of the few viable growth hotspots on the entire globe, and with its growing middle class with an increasing amount of disposable income to spend, companies in this region are now an irresistible buy for global corporations intent on gaining a foothold on the continent. Peter Okaba, CCTV, Nairobi, Kenya.
All right, let's discuss this further with Sumitra Naidu. She joins us live from Johannesburg. Good to see you, Sumitra. So this is seen as this deal is seen as an entry point by Walmart into the East African market, obviously coming 2 years after acquiring Massmart there in South Africa. So what is the retailer seeing in the African market, and how has the performance been so far in the South African market?
Well, you know, clearly Walmart is seeing the growth potential in Africa. You know, apart from South Africa, where consumers are really constrained at the moment, they're under a lot of pressure. They're not able to spend as freely as they would like to. The rest of Africa is still on a really strong growth path. Kenya, for instance, its retail industry is very strong, and it's forecasting that strength to continue over the next couple of years, and that's despite high inflation in the country. And of course, you know, Walmart is seeing this as a central point, Kenya being the central point, trading point for East Africa. Port infrastructure is really good there. They actually see it as a good entry to get into Kenya and then expand into the rest of Africa. That would actually make it a little bit easier for them to target other countries in Africa. And of course, you know, they have been planning for quite a while now. So they have done their homework and they're ready to get in there. Of course, it's just, you know, whether the talks will be successful at this stage.
But Sumitra, looking at the trend, South African companies have not really found favor in the Kenyan market. If you look at brands such as Submila and Nando's, so what drives the optimism that Massmart will succeed in the Kenyan market?
Well, you know, I think it's really its pricing model. And I think, you know, if you look at it, even though there's some, you know, some people really skeptical about them going into Kenya, it's a tough market. They feel that Walmart's been around the block a couple of times. It knows how to get into these countries, and its pricing model is so attractive. Because of its sheer size, it has buying power. And of course, you know, it's able to buy goods at a discount and then offer that at a discount to consumers, which you know, positions it really well for the African market. And of course, from the consumer side, consumers will now have more choice and will also be able to get it at a discount. The South African market has been really tough for the retail industry, but Massmart, which is now owned by Walmart, it's really been doing well. I mean, this week we've got results out from Massmart, a 57% jump in headline earnings for the first half year. The full year forecast is a hike in earnings of around 66 to 77%. Of course, you know, investors were looking for a little bit more, but considering that you're in such a tough market here in South Africa and you're still producing those kind of results, definitely means that, you know, that kind of pricing model is penetrating the South African market and seems to be doing really well. So I think if they take that model to the rest of Africa, and with that growth potential, the fact that consumers are still able to spend, I think they would actually do well. Although some analysts are saying that, you know, Walmart may have to pay a premium to actually get into places like Kenya because their business model is slightly different.
All right, Sumitra, let's leave it there for now. Thanks for this perspective. Sumitra Naidu live in Johannesburg. Now, state ministers from Tanzania and South Africa and Senegal have said that China remains the leading trading partner with their respective countries. The ministers were attending the just-ended 12th Annual African Growth and Opportunity Act Forum in Addis Ababa, Ethiopia.
Since 2002, China has invested an estimated $75 billion in Africa. The Tanzanian trade minister, who attended the 12th African Growth Opportunity Act, told CCTV that the business relationship between China and Tanzania has been quite excellent for the last 50 years. Apart from assistance with the railway network, Tanzania is getting more support from China, which is expanding its investment in coal and iron mining.
The Bagamoyo Port and the EPZ facility, which will be financed by Chinese banks, is a very huge, it's a $10 billion project, doable in 10 to 15 years. So that is not a small project. But we have those two projects in Riganga and Mchuchuma coal mine and Riganga iron ore mine. They are also being done by Chinese companies.
Sierra Leone Minister of Trade and Industry Ali Badara Mansari also told CCTV that the 41-year-old China-Sierra Leone relationship is gaining momentum.
We have a fantastic relationship with China spanning 41 years. They're doing our roads. They are building a new airport for us. They're working on other capacity building aspects in terms of human resource development. They are opening up their country for us to access scholarships to their universities and middle-level training institutions.
Emphasizing on the need to strengthen bilateral ties with China, South Africa's Deputy Trade and Industry Minister, Ms. Elizabeth Tabitha, also said China has remained a leading trading partner for her country.
We've got a good relationship with China. We've got trade agreements that we have signed with China like any other country in the world, and we hope that then we'll keep the good relationship that we have.
Similarly, Dr. Malik Diop, the CEO of Senegal Export Agency, says China has helped the Western African nation in commerce, infrastructure like road development, and it also helped in the construction of stadiums in the Senegalese capital.
Two projects are very important for Senegal. The first one is building stadiums. They have building the biggest stadiums in Senegal, in Dakar, the biggest theater in Senegal, which is built by Chinese government.
China's official position on economic partnership is based on cooperation, non-interference with the country's internal political affairs, and a mutual beneficial relationship for all partners. Sun Lan, CCTV.
Right, let's have a look at how markets performed on the last day of trading this week, starting, of course, with the Nigeria All-Share Index, which ended the week in the red, 0.34%, going down to the GSE, ending the week with just almost about 1% in the green. NSE 20-share index in the green as well, with almost about 1%, and the EGX, as always on Friday, was closed. That's BizAfrica. Thank you for watching. I'm Penina Karibe.